Warren Buffett is one of the greatest investors of all time with a net worth of over $82 billion. He has regularly been in the market for decades with his discipline and patient approach to investing. We ordinary folks may be unable to invest like Warren Buffett. Still, we may follow one of his recommendations. Low-cost index funds are best investment option for most people. Investing in an index fund is famous for many investors since it provides access to an extensive range of equities, lower risk, and cheaper fees. Because of this, many investors, particularly novices, prefer index funds to individual equities. Hey guys, what's up? I'm Jules and welcome to Investing Wise Academy. In this video, let's look at 6 Fidelity index funds that are best to invest in 2022. Before we get to it, make sure to smash the like button and let's begin with number 6. The Fidelity Total International Index Fund or FTIHX. Stocks in this fund are chosen from the MSCI All Country World Index, a benchmark designed to measure the total performance of established and emerging markets worldwide. That means this fund solely invests in companies outside of the US. This is especially true if you hope to broaden your professional horizons by working on projects abroad. Nestle, Alibaba, Samsung, and Toyota are among the top holdings in this Fidelity Fund, which presently includes 4,825 stocks. Since the fund's debut in 2016, the average return has been roughly 8.89%, implying that $10,000 invested in 2016 is now worth than $16,000. Compared to some funds in this list, 8.89% is a solid return, but historically, that's only a mediocre return. It's not about getting the biggest returns in the market with this index fund. Other index funds will be used for that purpose. This index fund is highly cost-effective. In other words, a cost-to-income ratio of 0.06. On a $10,000 investment, you'll pay only $6 a year in taxes. Number 5. The Fidelity Zero Total Market Index Fund or FZROX. FZROX invests in equities, including the Fidelity US Total Investable Market Index, an index designed to mirror the performance of the US stock market. FZROX stands out from the rest of the index fund on our list because it performs something that no other index fund had ever done. For the first time ever, FZROX is an index fund does not charge fees. The cost-to-income ratio is set at 0%. The $10,000 you've invested will cost you nothing each year. When Fidelity did this, they tried to get people to open accounts with them. It has had an annualized return of 18.01% since its inception in 2018. To put it another way, if you had invested $10,000 in 2018, it would be now worth $17,600. Moreover, FZROX has 2,662 equities in its portfolio, with the most prominent holdings being Apple, Microsoft, Amazon, and all other major players. If you're reading this and believing this fund is free, you're not alone. Investing in stock market can be risky, but it can also be rewarding. What could possibly go wrong? FZROX and any Fidelity Zero branded index fund cannot be transferred to other brokers. This is a vital point to make. In this case, let's imagine you wish to transfer your FZROX shares from Fidelity to Vanguard, for example. Before making the conversion, you first need to sell all of your shares in FZROX and close out your position. I know what you're thinking. What could be wrong with that? A capital gain is a taxable event when you sell something for more than what you paid for it. Assuming your investment was a success, investing profits are subject to capital gain tax, a type of income tax. Furthermore, the Internal Revenue Service or IRS will take your money unless you invest in tax advantage account like Roth IRA or 401k. Number 4. The Fidelity Zero Large Cap Index Fund or FNILX. The Fidelity US Large Cap Index tries to track the total return of US large cap firms, and this fund invests in those companies. A corporation with market capitalization for more than $10 billion qualifies as a large cap company. Big companies tend to have a long history of generating high quality goods and services, which lead to sustained growth over the long term. Many of the 516 stocks in this portfolio owns household names, and you probably utilize their products and services regularly. This also explains the high rate of return on this index fund. A $10,000 investment would be now worth more than $17,500 if it had been made in 2018, based on an average return of 18.56% since its commencement in 2018. Remember that unless you're Warren Buffett and investing in a full-time profession, most of us require diversified portfolios that include exposure to different industries, market capitalization, and various types of investments while investing in an index fund. Since it only invests in one market cap, this is a good index fund in your portfolio, but it shouldn't make up the bulk of your portfolio. Number 3. The Fidelity NASDAQ Composite Index Fund, or FNCMX. One of the fund's objectives is to invest in stocks that make up part of total return of NASDAQ-listed US stocks. NASDAQ 100 has outperformed the S&P 500 for the previous 15 years, which isn't a surprise. There's no way to argue with that because it owns many large companies like Apple, Microsoft, Amazon, and Google. It accounts for about half of the S&P 500 index total value. Because of this, there is the claim that this fund lacks diversification. You can, however, combine with this fund with other total market funds on this list if you place a higher value on diversity. In terms of how well they did, over a decade, this index fund has generated an average annual return of 20.76%. Your $10,000 investment would be now worth nearly $66,000 if you made it 10 years ago. Of course, this fund has a higher expense ratio, coming in at 0.29%. You may expect to pay $29 a year in interest on $10,000 of your money in the bank. It's possible to avoid the high expense ratio of the QQQM ETF and yet obtain exposure to NASDAQ 100 index by investing the Invesco NASDAQ 100 ETF. That's because it has 0.15% expense ratio, which is less than half of this index fund's expense ratio. Number 2. The Fidelity Total Market Index Fund, or FSKAX. This fund invests in equities that are part of the Dow Jones US Total Stock Market Index, which is an index fund that aims to reflect the total return of a wide range of US stocks. Except for one crucial difference, this index fund is remarkably similar to FZROX. Because of this, unlike FZROX, FSKAX can be transferred to a new broker anytime. For example, your goal may have been moved from Fidelity to Vanguard. Even though FSKAX is a Fidelity index fund, you would be able to transfer it to Vanguard successfully if you had it in your portfolio. The fund presently has 3,875 stocks, including Apple, Microsoft, Amazon, and several other well-known companies. A $10,000 investment in this fund 10 years ago would be worth just over $45 now, according to an average annual return of 16.25%. This index fund's cost ratio is just 0.015%. On a $10,000 investment, you'll only have to pay $1.50 per year. Number 1. The Fidelity 500 Index Fund, or FXAIX. The S&P 500 index tracks the 500 largest US firms, and this index fund invests in their stock. More than 500 major US corporations may be found in FXAIX stocks portfolio. Among these are Apple, Amazon, Microsoft, and the rest of the top 500. This fund's average annual return over the last 10 years has been roughly 16.54%, implying that $10,000 invested 10 years ago is now worth almost $46,000. Even while this fund isn't free like some Fidelity index fund on this list, it almost is. This index fund has an expense ratio of 0.015%, implying that if you invest $10,000, you'll only have to pay McDonald's for a bit of fry per year. If you're looking to accumulate wealth over the long term, this index fund from Fidelity may be your best bet. Invest in either this or FXAIX, depending on whether you want exposure to the entire market or the S&P 500. The S&P 500 index does not include any small cap stocks. Thus, this fund does not give you any exposure to small cap equities. It's easy to get irritated with the cost of actively managed funds. In rare cases, a well-trained investment manager can outperform the stock market. Only a small number of managers have regularly achieved this goal. In addition to their many advantages, index funds also have a few disadvantages. Before investing in an index fund, be sure you know what it is and isn't. So, which of these 6 Fidelity index funds caught your attention, and why? Let us know in the comment section below. Thank you so much for watching. If you're new to this channel, make sure to subscribe and hit the notification bell button to get updated on our latest videos. Again, this is Jules, and don't forget to like this video and see you next time.